So now we're going to turn to Asia, talk about China, talk about what's happening in just the region in general from trade perspective, from what are some of the fallout and contagion from Evergrande and China, and realistically, what is going to happen with these shortfalls in electricity. So one of the things that we would want to talk about is a recent dispute that had just happened. So apparently, within right near this Sikkim on the Doklam Plateau issue in the Tunhun Pass, you had an area where some PLA individuals, about 100, came over into the Indian side of the disputed zone. Now, it was in a demilitarized piece of it, but still the Indian side, and essentially grazed for several hours using some of the grazing fields, and then went back across the bridge, damaging the bridge and some of the other infrastructure in the process. The India's army responded, and by the time they got there, it was gone, or the issues have gone. But it came from a newly constructed PLA, or the People's Liberation Army's garrison. So is this them not knowing where they are, which is unlikely, or is it them just kind of showing like, hey, we can come across whenever we want and we can be gone before you can respond? Now, again, there's a lot of things happening right now. We're coming into winter, so it's unlikely we get anything really big happening, because this is all really, that's why we, in the beginning of the year, we talk about the spring thaw, because the spring thaw is really when you start to see some of these issues where typically you see things locking down, which is why things have calmed down in Afghanistan. You'll see things calm down again in Kashmir, and they will along essentially the Himalayas, let's be fair. So that's where it was kind of like the last little, hey, look at what I can do and you can't stop me. So this is going to be something to watch, and they continue to press further and further closer to the Sikkim Doklam Plateau, which is really the only easy way to get heavy machinery through the Himalayas within this region, and then this would flow straight down into the Bay of Bengal. So the one interesting to note, the new China border incident with India sits roughly 70 kilometers from a newly constructed operational PLA garrison in the region. And then I've tweeted about it at Manu, Pubby has a story on the incident where he discusses what things have done. So I'll post that story in the comments. But again, something to continue to watch, as we always talk about with China versus India. So now we get to talk about building a bubble. And what does a bubble look like? So the impact on GDP activities related to real estate. It's important to note that when you look at the U.S., so let's take the U.S., which is this black line here. So the U.S. in 2006 was about 17% of real estate was GDP. So now in China, about 30% of real estate is in GDP. So just think about this and think about what happened in 2007, 2008, 2009, and what that would be for China on essentially double the size. This is why we talk about it. Is Evergrande Lehman? Probably not. Is it Bear Stearns and Countrywide leading to a Lehman? Yes. And that's the underlying construction of this all. It's something that it's a boulder that's been kicked off the top of the mountain, and it's rolling down, and it's going to continue to pick up steam, because as this pressure mounts, as the Ponzi schemes get unraveled, if you can't take from Peter to pay Paul, that it's over. The game is over. So here's just some quotes about the different situation. So in all around, 27% of Chinese bank loans come from the real estate sector. Real estate is the main form of collateral for loan securitization. So when you think about how much real estate, how many loans have been collateralized, how many times has this piece of real estate, how many loans is backing it up? Because nobody seemed to have checked how, if there was double counting, triple counting, quadruple counting on collateral, which becomes a much bigger issue. So in 2017, almost 18% of the urban labor force was employed in real estate and related industries. In 2018, the sale of land by local governments accounted for as much as 35% of their revenue. Much as happened in Japan in the housing bubble in the late 1980s, the market value of China's housing stock is now more than double that of the US and triple that of Europe. This means that housing wealth forms a significantly larger share of overall assets in China, 78%, than it does in the US at 35%. Rogoff and Yang concluded the Chinese households' consumption is therefore significantly more sensitive to a decline in housing prices. I'll have charts on that in a minute. Than that of their American and Japanese counterparts. A 20% fall in real estate activity could lead to a 5 to 10% fall in GDP, even without amplification from a banking crisis or accounting for the importance of real estate as collateral. To put it simply, China's growth has been boosted for many years by the construction of an excess amount of housing units. Again, as we said, what is the one that breaks it? Is it going to be 101st, the 101st Ghost City, the 1,000th and first, the 10,000th and first? But we come to a point where you can't continue to go on. So China's growth has been boosted for many years by the construction of the excess. This has been financed by an unsustainable mountain of debt, as the Beijing-based economist Michael Pettis noted last week. China's official debt-to-GDP ratio has soared by nearly 45 percentage points in the last 5 years, leaving it with among the highest debt ratios for any developing country in history. Relative to the size of the economy, non-financial corporate debt in China is now even bigger than it was in Japan in the late 1980s, and both tower blocks and debts have been going up at a time when the Chinese workforce has begun to come down. With the birth rate falling, the total population is forecast by the UN to shrink by around 25% by the end of the century, conceivably even by 50%, which we'll talk about in a minute. So now let's think about what this means going forward, and let's look at Evergrande. So what are some of the issues and things that we're going to be looking at? So Evergrande's coupon repayment deadline, US for red bars, yuan in blue bars. So in September 23rd, which we know they haven't paid, they're supposed to pay today. We know they're not going to pay it. So there's some talk that they've made a deal that they'll pay a percentage of local debt and a much smaller percentage of international debt or US dollar denominated debt. Now, the issue is you have I shouldn't say the issue. What you have now is a grace period. So for those that haven't been in fixed income, when you don't pay an interest payment, there a 30-day grace period is enacted. And you have 30 days to pay with no penalty, or you have 30 days to make a good faith effort to come up with an agreement, whether that be something acceptable to the bondholder, or you try to come up with a prepackaged bankruptcy that then the bond is called. You then go into bankruptcy. Everybody agrees. You go through everything. The judge looks at it. The lawyers look at it. Judge hits his gavel, you come out, and things have changed. So these are things that are going to adjust, but just gives you an idea of how many issues we're going to have and how many points in time that we're going to see how bad Evergrande is. When are they able to do it? They were able to sell some of their bank holdings for about 9.9 billion yuan. But again, that's peanuts for what is actually needed in this market for them to continue, which again is continuing to become a broader problem, as it's not just Evergrande as the issue. As you look at the collateral, as we just talked about, as you look at the exposure, as you look at just the sheer leverage of it, there's just more to fall. There's more failure to come. But how does the party separate itself? So this is something interesting. So these are some quotes from Jin Zhu. Our party has won the choice of history with struggle, sacrifice, and achievements. This is the historical logic of adhering to the party's leadership. With our sincerity, blood, and hard work, our vanguard and exemplary role, and our flesh and blood ties with the people, our party has led the people to create a happy life. This is the theoretical logic of adhering to the party's leadership. Historically, practice has constantly proved that our party is the most reliable backbone and anchoring star of the Chinese people when a storm strikes. The party can overcome all kinds of difficulties and obstacles and deal with all kinds of risks and challenges. This is the practical logic of adhering to the party's leadership. So essentially, they're saying the party is awesome, nothing to fear, and when this does go down, they're essentially saying this is going to happen, but don't give up on us. Like, don't riot, don't protest, don't blame the communist regime for this, because without them, it would be even worse. And this again, you always have to look at what they're saying, how they're saying it, to whom they're saying it to, because that is going to become a much bigger direction on where the narrative will shift. And then with the week-long National Day holiday kicking off on Friday, the CPD wants to remind everybody just what they're celebrating and who to thank. So now let's look at Evergrande. So let's look at Evergrande in a much bigger, broader issue, and why this becomes a problem for the party. So Mr. Zhu, who's obviously a very important person and the CEO of Evergrande, was also a power broker who socialized with the Communist Party's elite families, according to a memoir by Desmond Schum, a well-connected businessman. In his book, Red Roulette, published this month, Mr. Schum recounts a 2011 European wine tasting and shopping spree in which Mr. Zhu took part along with the daughter of the Communist Party's fourth-ranking official at the time, Xi Jinping, and her investor husband. The party flew to Europe on a private jet with the men playing a popular Chinese card game, called Fight the Landlord, a pavilion, a Paris restaurant. The party spent more than $100,000 on a wine spree, downing magnums. So again, opulent. Mr. Zhu considered buying a $100 million yacht owned by a Hong Kong mogul to supercharge Evergrande's growth. So that's where the opulence, they're buying an EV company, buying a soccer company. He bought 2 private jets to move the soccer company, the soccer team around. You're looking at just how money is being spent. To supercharge Evergrande's growth, he often borrowed twice on each piece of land that he developed, first from the bank and then from home buyers who were sometimes willing to pay 100% of the value of their future home before it was built. So this is where you get some of this contagion and connection of, technically obviously the bank has the right to it, but you borrow twice, and the consumer is now also on the hook. So how do you separate and make these individuals whole? Mr. Zhu has remained mostly out of the spotlight. His evolution from poverty-stricken boy to property tycoon, no longer useful for the national narrative. And I think that's important to say. He was brought up as, look, you look at what he's done, look at what he's achieved. That has since started to go away as the issue started to arise. And again, Evergrande is not new to these problems. Like none of these things are hidden. It's just they're now been pulled to the forefront based on what has been happening. So his company has tried to sell off some of his assets to raise new funds, but has had little success. Home buyers have recently protested on the streets and complained online about delays in construction. The central bank has put Evergrande on notice. China's increasingly nationalistic commentators are calling for the company's demise. Debt-saddled corporate giants like Evergrande were given the freedom to open their bloody mouths and devour the wealth of our country and our people until they are too big to fail. Li Guangman, a retired newspaper editor whose recent views have been given a platform by official state media. So again, the narrative is shifting, and there's going to be others to fall. So then when you look at developer funding leads investment by around 9 months. So when you look at, in a note to clients, so the China's Beige Book coming from their Twitter account, wrote that every core property gauge they monitored, ranging from sales and profits to new transactions and hiring, weakened this quarter, and construction subsectors plummeted. So again, you're looking at just a growth engine for the economy, just the floor falling out from beneath it, creating that bigger issue, which is being shown in this new funding year over year, investment year over year, all coming down and essentially either negative or just about negative and going further down as we go forward. Again, going into Q4, it's going to be a very tough period given the struggles that they're having. So then when you expect moderately lower house prices in China, but the authorities are in the driver's seat. The issue is the amount of wealth that individuals have now attached to these issues, to these fluctuations in price. A lot of party members are going to be impacted. A lot of other companies, a lot of banks. What is your mark to market? Have you marked to market? What happens when you see that movement of marking to market these loans? Because you're going to see a lot of movement down. A lot of banks that had bad leverage before, over 30 times levered, going to go much higher as these loans and these assets get written down. Again, maybe they never do it, so they don't have to recognize it. But this is why the PBOC has been slightly pushing some additional liquidity in, small, but again, still moving some liquidity back in to try to adjust. So that's why we're going to have to continue to watch those China credit impulses, because as we've been saying, they don't want to see that stop. And the 3 red line policy became kind of that pivot point, which is where we were talking about it in 2020, where you started to see this acceleration, these problems, and they wanted to aggressively go after this elevated leverage and debt. So how do you adjust some of this? Well, you have to look at the council published the outline for children's development in China. Because remember, they've gone after other things. And that's not just property. It's private tutors. It's gaming. It's home prices. It's all of these things but how do they prop up the birth rate? China's birth rate is in a free fall, so Beijing is scrambling to boost births by relaxing family planning rules, encouraging 3-child families, and rolling out tax breaks. They're trying to boost access to and affordability of prenatal and early childhood care, expanding early childhood education and child care services, improving welfare systems to ensure all kids have access to basic care, nutrition, safety, introducing even more financial incentives. It also packs a fair bit of ideology, of course, because we're in the period of respecting the party. Adhere to the socialist approach for running schools, protect children from all kinds of bad news, and improve children's media literacy, resolutely curb the spread of vulgar and violent online language. So, bad news. Well, hiding what bad news? A bunch of recent crackdowns, including on, again, the private tutor, raising the next generation well and increasing its headcount has emerged as a top policy priority for Beijing, including Xi. So now let's look at this on economics level. So let's put numbers behind this. So the Chinese property market is probably the largest asset class globally. So when you look at it, total value is about $60 trillion with about $11 trillion in inventory. So that's just the residential property side. So then you look at the US, you look at Japan, you look at UK, Australia. There is more connected to this, and how much of this has been levered in terms of capital and again, like in terms of collateral. So then take the housing market represents 60% of total urban households assets in China. So in the US, 23% is property in the composition of household total assets. In China, it's 62%. So the exposure to something as broad in equity and MF in terms of a lot of these things in terms of just money market funds and equities, but it's housing, it's property. This is going to be a much bigger problem as things start to unwind. So Chinese banks have tightened mortgage lending rates between 5.2% to 6.4% in major cities for mortgages on first properties, 6.4 to 6.5% for second. 70% of cities raised rates in the second half. So again, you're seeing they're trying to curb this by raising rates and taking some of the air out of the sails, if you will. All forms of developer financing are tightening up. Loans, self-raised funds, total. All of this is coming down to deposits and mortgages. Regulators forced a sharp cutback in lending to property developers, again, trying to just create a soft landing instead of a very hard landing. But based on the peak that it's falling from, it's going to be very difficult to avoid some of the damages and contagion that we've seen over time. So this is where I'm going to deviate a bit with the chart, because I think it's important to show both sides, because Chinese stimulus is on the way. So when you look at it, excess reserve ratio advanced by 6 months, credit impulses. So one of the things that we've been saying is they don't want the credit impulse to go too far down, but they also don't want it to go too far up. And we're starting to see the PBOC make some adjustments, but it's measured. They're going from, they're issuing 60 billion renminbi in new liquidity, but they're letting 40 billion expire. And so you're getting some, but again, not a huge number to try to manage this capacity, not to get this huge explosion in credit impulse, but they need the excess reserve ratio, because these assets that have been collateralized multiple times are now a huge landmine on these balance sheets. And remember, as we said last time, Bank A issued perpetual bonds, which were bought by Bank B, and then Bank B issued perpetual bonds, which were then bought by Bank A and C. So you continuously have this cycle, and the assets that may have been used to collateralize loans in two different locations, they each have their own percentage of exposure. And there's a huge intertwining where until you get that really cascade, you don't really know what this is. So that's why it's hard to say this is Lehman. Is it Bear or Countrywide? That I think is a yes, where it starts the process, where instead of stacking the dynamite on, they've lit the fuse. So it's just a matter of how big that explosion is going to be and how much dynamite they can take off the pile before it really goes away, explodes. So this is coming from Yi, the PBOC president. China's potential economic growth is still expected to remain in the range of 5 to 6%. Laughable. If conditions permit, normal monetary policy can be implemented, and the yield curve can also maintain a normal upward slope. So the PBOC is just implemented two pretty big reverse repo injections, but it's not uncommon for the PBOC to inject a little bit of liquidity into the financial system just before the end of the quarter and ahead of a national holiday. So again, you're also coming into a different shift. So the infusions were also about bracing for possible fallout. So you had fallout, you had end of quarter, and you had a national holiday. So again, we have to see what happens at the middle to end of October and really into November to see how this is going to play out. So the central bank really, really, really doesn't want to return to stimulus. How bad will things have to get before Yi and company relent on their principled monetary policy stand? They're willing to hold the line much longer than most investors think. Again, that's Trivium talking. And to be fair, I agree with that. I think stimulus is going to be hard to come by, and that's where I deviate with some of that talk within the system. And then this is just looking at some of the sales managers. Again, this is just looking at another data point of worldeconomics.com. You're starting to see some of that roll over. For some that follow China Beige Book and some of these other guys, I would say it's already pretty firmly either close to 50 or below. So EM correlated as external risk. So this is something that's important to look at, how much exports to China and how much exports are important to GDP. So you can see how the Asian contagion can also increase, and it also impacts the U.S. just as much because we import from all these countries, especially the ones at the front of the list, which is going to create a little bit an even bigger kind of that roll through that becomes a problem, and that contagion expands. Now let's talk about electricity prices, because why not? OMEL day ahead average electricity spot price has come down, but the G3 credit impulse percent. So electricity prices are usually uncorrelated to the credit economic cycle. The recent surge is politically driven. So these are going to be some of the shifts that we want to look at on that electricity side, because politics, bad policy. There's no reason we should have electricity prices where we are, given where credit impulses are. So you have to really look at, it's not because the economy is booming and everybody needs electricity. It's because there either isn't enough electricity because we've relied too much on a form of power that is unreliable, or it has a peaker natural gas backup and natural gas prices exploded. So you're seeing some of this bleed through that we really have to address. How do we fix this to make and normalize some of this pricing? And China's energy crunch is also going to hurt industrial metals. So here's just looking at industrial electricity output has floored, even though nickel remains elevated. So when we start looking at nickel and tin and aluminum, there's going to be some of this slowdown because these things consume a significant, especially aluminum, a significant amount of power to smelt and to create the ingots that you need to essentially move to the next process of building. Over the past few days, provinces nationwide have been grappling with the sudden power shortage. On Friday, Beijing ordered industrial production halts. Regulators said the move was necessitated by upcoming end-of-year energy targets. Under the 14th five-year plan, by 2025, China is supposed to decrease energy consumption per unit of GDP by 13.5% and carbon emissions per unit of GDP by 18% compared to 2020 levels. On Saturday, Guangdong called for power curbs across the industrial, commercial, and residential sectors. The curbs were driven by thermal coal and natural gas shortages, with demand exacerbated by the ongoing heat wave. Notably, Guangdong's electricity consumption from January through August rose over 17% year over year. On Sunday, Linying and energy authorities held a provincial power guarantee work conference following sudden power gaps. Shortages reaching 10 to 20% at peak were exacerbated by an unexpected drop in wind generation. Shocker, haven't seen that before. Additionally, provinces remain on the verge of instituting strict curbs amid ongoing tight coal supply and unusual weather patterns. On Wednesday, Hunnan's provincial grid operator recommended curtailment of non-essential power use, such as billboards, in an attempt to avoid industrial power rationing. The current power crunch reflects the ongoing risk of China's dependence on coal. Shifting weather patterns likewise threaten renewable energy's reliability, as seen in Linying. The end result, a need for increased energy diversification, in which coal plays an ongoing, if diminished, role. Natural stopgap is natural gas. None of these power supply issues can be addressed quickly, so for the next few months, at least, expect rolling power outages to be the order of the day. So let's look at what does that mean? So more than half of China's mainland provinces are limiting electricity use. So you get an idea of just where that electricity is being curbed. But then look at, so I thought this was a good chart of just the size of GDP of each region that is seeing these curbs. So essentially, Korea, Canada, Russia, Australia, and Spain are seeing some of the largest curbs in activity. And you're just seeing just the level of GDP production. But so now you're getting electricity cuts, which is hitting ports, hitting industrial, and now you have the retail side. You have the consumer that's been weakening, as we've been showing. So you're still going to maintain 5 to 6% growth? Like, on what? And that's where you continue to see a lot of these shortfalls, as some of these areas account for over $1 trillion in GDP, seeing some of these overhangs that continue. And you just get an idea of just how big these power curbs are and what that means for industrial production, exports. Again, increasing prices for others because you're not going to be able to export. You're going to have these issues. You're going to have cost increases, which again is going to increase the cost of exports, shorten or limit the amount of exports available. It really, again, screwing up what is happening on the coast and into the international market. So China's seasonal industrial output, product output, when you get an idea for 2021, we're on cement output, we're right at 2020 levels, 2019 levels. China crude steel output, you're crashing through a floor. China plastic and resin is starting to come down, but given where some of those are, that's continuing, as we talked about it in the EIA show. Electricity output, obviously coming down. Aluminum output moving closer to the 2020 level. well below 2017. And then the ferroalloy output is now below both 2019, 2020, and 2017 levels and moving closer to 2018. Again, all of these things are just limiting and hitting much bigger. So in recent days, just to give you a quick update on the biggest shortfalls, Hunan, Guangdong, Hebei, Anu, Shandong, Tianjin, and Lining. Hardest hit are Hunan, Anu, and Guangdong. If left unaddressed, Hunan's power supply shortage could exceed 10 million kilowatts within a week. Anu suffered 2.5 million kilowatt power shortages. On Thursday, Guangdong, Shenzhen ran about 2.8 million kilowatts short. So again, remember, Guangdong is a huge industrial hub. It's one of the biggest in terms of when you think about on that chart. When you look at Guangdong, you're talking about a serious shortfall. So the Hunan power grid pledged to prioritize electricity dispatch for public use while limiting industrial use. Guangdong's energy regulator ordered coal-fired power plants to reserve coal supply for at least 7 days. It is even considering increasing subsidies for thermal power plants to keep them running despite the high cost of power generation due to high commodity prices. So summer weather, cooling needs, economic recovery you're talking about so many things hitting at once. Power shortages are bad for everybody. They affect people's lives daily, which is why this is being addressed so aggressively. Some power providers have sent notices to heavy users to either halt production during peak periods that can run from 7 a.m. to 11 p.m. or shut operations entirely for 2 to 3 days a week. Others have been told to shut until further notice or a particular date, including soybean processing plants in Tianjin in eastern China, which have been shut since September 22nd. So when you look at the breakdown of power coming from China, here's where you can see, you have your thermal power, which is obviously when you're looking at natural gas and coal. This is where you're seeing some that piece. But then you look at the hydroelectric, which has come under pressure from droughts or flooding, which is again you had to pass through. Wind power has come down. It's just it's policy at the same time, because we know they're going to miss. So we know they're going to miss their target, but you need to be able to point to a reason. And this is, I think, another one of those ways to show, look, it's not our fault. Things were going so well that we had to shut down. And again, I think that there's going to be something to be said about that. And here's just an example of hash rate, or the amount of Bitcoin mining, as they have now officially made it illegal. So you can see China has continued to fall in the amount of Bitcoin miners existing within the country, as they've tried to ban all crypto to try to essentially just preserve electricity. So then when you look at weak starts, we'll continue to drag on construction activity. Again, steel production use coming down, as we talked about earlier, implied construction pipeline coming through a floor. Then when you look at China's cooling consumption, now looking at retail sales year over year, retail sales are coming down through a floor. All the while, PBOC liquidity injections continue to try to drive higher. So when you look at the setup, all I have and all that Evergrande group has achieved were endowed by the party, the state, and the whole society, Mr. Xu said in a 2018 speech, thanking the Chinese Communist Party for his success. China is threatening to take it away, as debt that powered the country's breakneck growth for decades is now jeopardizing the economy, and the government is changing the rules. Beijing has signaled that it will no longer tolerate the strategy of borrowing to fuel business expansion that turned Mr. Xu and his company into a powerhouse. So then when you look at the company, which has unpaid bills totaling more than $300 billion US, missed a key payment, again, started to come on the, so this is the beginning. So according to Leland Miller, who's the chief executive officer of China Beige Book, this is the beginning of the end of China's growth model as we know it. The term paradigm shift is always overused, so people tend to ignore it, but that's a good way of describing what's going on right now. So then when you look at those PBOC injections, this is the reverse repo that we've been talking about. This is what we want to look at, what October looks like as we get to the other side of month end, quarter end, other side of the national holiday, and then look at how they try to structure going into the end of the into Q4. So cumulative issuance of Chinese companies in offshore bond markets, you get an idea of right now about $1 trillion investment grade high yield. But then again, what is investment grade and how will it get taken down? So you get an idea of just where that massive growth that has happened. And this is just what we know of versus what has been done off balance sheet. And then based on the Belt and Road Initiative that has been invested in some of these emerging markets. China industrial profits obviously coming under pressure, electricity pricing, obviously raw materials versus electricity prices continue to struggle. And then coal stockpiles at power plants are the lowest in nearly 4 years. And we're talking about India. So this isn't even a Chinese, not just a China problem, it's also an India problem. And that's when you start looking at where these prices are going and how Australia is going to try to make backstop, as well as Russia on the thermal side, as India's sales managers index still remains negative when you look at the world economic level on the India side. Business confidence still negative. Market growth still negative. Sales growth, just barely positive. Prices charged starting to go up. Staffing levels still negative. Profit margins still negative. So again, there's still a lot of pressure within the Indian economy. So it's not just China. It's still much bigger in terms of where the issues reside on that east of Suez as we talk about energy consumption, as India has struggled on their diesel consumption, which again is indicative of underlying economic growth. So then when we look at Japan, so Japan PMI, manufacturing came down a bit to 51.2. Services came up to 47.4. Composite came up to 47.7. So as we were saying, we expected manufacturing to slow, services to grow, not go positive, still contract, but in a contractionary level, but still moving in a positive direction. Then when you look at August sales, you have that negative move. As we saw, August was kind of that low point as September kept going up. And then those leading indexes continue to stay fairly flat. So again, these are PPI services. Year over year was expected at 1.2%, came in at 1%. So realistically, you're starting to see some of that recovery, but we're seeing it level off. And that's the problem that we keep coming back to. It's leveling off in a contractionary level. And that's where we see some of these friction points, because services have gone from 42.9 to 47.4, as we said they would, but again, at a much, at still a contraction. And then Taiwan export orders were expected at 21.3, came in at 17.6. So you're starting to see some of that slowdown reverberate through the system. Industrial production was expected at 12.7, came in at 13.69. But again, the exports, imports, that's where we're starting to see some of this slowdown in trade, with Japan department store sales continuing to essentially a huge swing and a miss for August. But we will get some of that recovery in September. But the question is going to be, really, we're supposed to, given timing and just what normally happens. So it'll be interesting to see how this continues to play out, as South Korea has had some decent numbers. When you look at PPI was expected, last month was 7.1%. It revised up to 7.4% and came in at 7.3%. So you're still seeing huge cost increases in South Korea, even though their exports still remain strong, but still slowing, but along kind of that normal seasonal line that we've talked about. So I know we've covered a lot. And in depth. So if you have any questions, please let us know in the comments. You can find me on Twitter. Happy to talk about any of that as well. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.